afternoon. It's really actually nice to see your lovely faces. We're going to go ahead and get started. First, just a couple of remarks. So one, I want to say a big thank you to our sponsor, Cohesity. They do data security and data management to protect against ransomware. I also want to extend a special thanks to our speakers. A little bit of housekeeping before we turn it over to our lovely speakers. One, we are recording this session. Also, please remain on mute unless you're going to ask a live question, just to avoid the background noise. And in the spirit of keeping this really interactive, we will take questions throughout the discussion. Either raise your hand emoji that you should find at the bottom of the Zoom screen here, or you can type your question in the Q&A chat and we'll get to those questions. And now I'd like to introduce our moderator and leader, George Crawford. George, over to you.
Thanks, Leah. Appreciate that. Well, welcome, everyone. This is going to be a really fun session, and hopefully everyone will get a few different takeaways, which we'll go over as we go through this. But I'm very excited to be moderating this panel. I've done a little stalking, sorry guys, to see a little history on Herman and Larry and Brian, and very impressive resumes that they have. So I'm very honored to be here and to be a part of this. So I'm excited about the wealth of knowledge that they're going to be bringing to this. And that knowledge is going to revolve around board governance and risk management, and what all that means, and how each one of us do that within our organizations, and what it means to us. It means different things to different organizations, different companies, but I think that we'll get a lot of insight as we go through this. So, but I'm George Crawford. Thank you for joining us. I'm a CIO, CISO, and partner for a group called Catapult Energy. And I've been doing this about 25 years. I have about 30 mergers and acquisitions under my belt. But the thing that I've done for the last 20 years is build portfolio companies, shared services environments for financial organizations that have portfolios. So I'm on my third one, and it's been a blast. Also serve on multiple boards, both private, public, and nonprofit and education. So, but I'm excited about the panel. So without further ado, I'd like to go ahead and jump in. And Brian, you want to go ahead and introduce yourself, a brief description of your role and what you do, but also how you interact from a board perspective with the different groups.
Sure. Brian Spanswick. I'm the CIO and CISO of Cohesity. I've been with Cohesity for about 2.5 years. Prior to that, I was at Splunk for about 6. And at Splunk, I was the chief of staff for the CIO, driving large initiatives, investments on the IT infrastructure and business application side. And then when Splunk started to build out a proper cybersecurity capability, I partnered with the CISO to build out that function. How I interact with the boards, in my last 2 positions, my current one and at Splunk, had the responsibility to communicate cyber risk to the board, in particular the audit committee. So I presented both the audit committee, since they have got responsibility for the overall risk of the company. I make sure that they're in a position to make informed decisions about that risk and be able to consider that risk in a business context, so that it informs business investments more broadly. And so that's my responsibility here at Cohesity as well.
Great. Thank you, Brian. That's awesome. So, and we'll get further into that. And the key thing I think you said was a CISO talking in business terminology and value, which will be very much a unique thing to experience. I'm sure everyone on the call knows how to do that, but we're looking forward to that. Larry, you want to jump in and tell us what you're doing right now, and then also the activity you have within the different boards and responsibilities you have there?
Sure. Larry Quinlan. I retired about 1.5 years ago as Global Chief Information Officer for Deloitte, and since then been serving on a number of boards. So I serve on 3 public boards, a few private equity portfolio company boards, as well as some nonprofits that I'm passionate about. I also spent time in this space thinking about cyber and risk and cyber risk. And I chair 2 or 3 technology and cyber subcommittees of the boards.
Oh, great. Well, thank you, Larry. And last but not least, Herman, if you want to walk us through your role and your board interactions.
Well, sure. First of all, for the entire team and particularly for you for taking this on, George, happy to be here. Herman Bowles. I am vice chair of the board and international director at Jones Lang LaSalle, where Larry is my boss. Larry happens to serve on the board of JLL. So great to see you, Larry. In addition to that, I have several board positions that I serve on as well. And pertaining to today, I actually was the first chair of the risk committee at USAA. I probably served on 6 or 7 other major Fortune 500 boards. Currently serve as the chair of the board of Fluence, and it's a different perspective you take on even the risk and the committee assignments. And I also serve on probably another board that, particularly for Larry talking about cyber, I'm on a defense policy board, and that's a board that advises the Secretary of Defense on defense policy for our nation. In addition, on university board at West Point, as well as a governor of the American Red Cross. So really, and serve on several private equity boards where I'm advisor and investor.
Oh, that's great. With that background, I'll ask you later if you know Cliff Triplett, a good friend of mine from West Point, and has done a lot of the same things with the DoD and that. But so, well, thank you everyone for that. Obviously, just by what they just introduced, we're going to have a tremendous perspective on boards and the responsibilities of board members and how we interact with the C-suite and others. As we all know, as a board member, one of the things that's really top on our list is risk and risk mitigation and understanding the risk and ensuring that we align that risk with, business strategy in the organization, which differs from group to group. So if you don't mind, Herman, I'm going to go ahead and pick on you first and have our first question, which I'll read real quick, which if you could help us understand from a board member's perspective, obviously your perspective, we've all heard about risk appetites, right? But a lot of times we don't really know exactly what that means. So if you could help us understand what a risk appetite is and how to determine the appropriate level of risk within an organization to ensure that our risk strategy aligns with the business strategy. And that's a long-winded way. So
yeah, well, look, if you're
take it away.
Yeah, not a problem, George. If you're in business, you're in the risk business, right? Because that's what it's all about. So the appetite is, what is your willingness to take on what types and the levels of risks that are out there? And you want to do it in such a way that you're still achieving the organization's strategic objectives. So let's talk about the levels of risk for a second. And if you look at a company, the levels of risk can come in several areas, right? It can be, what are your goals? What are the industry norms in terms of what risk is? Think about thinking about it. We think about the regulatory environment. Those of us that are in financial services are certainly health and medical, a lot of regulatory issues involved. And then obviously there are the operational aspects of risk. Do we open the factory here? Do we go overseas, et cetera, as examples? And what it is with the risk appetite, it's all about balance, okay? You never want to be in a position where somebody says, we don't take risk. Because if you don't take risks, you're not going to make many advances. So what you want to think about is you want to align that risk with what is the business strategy you're taking on. And you also want to make sure that that risk is managed effectively, right? So you got mitigants to the risk that you take. And you also want to make sure that while you're having risk is all about making sure you still promote innovation and growth. It's very important for any organization, right? We've got to continue to grow. And generally to do that, there's going to be some risk involved. And if we think about that balance that we want to do, we also want to think about the collaboration that it takes with the risk. So you've obviously got the board, you've got senior management that's going to be involved in it. And believe it or not, you've got your relevant stakeholders. So I talked about if it's regulatory issues, your suppliers, the communities in which you live, that whole stakeholder analysis of capitalism. So it's important. But the goal overall for corporation, as you think of that risk, is to come up with what? A risk governance framework so that you understand what your risks are, what your risk appetite is, and what are the triggers that it's going to make management get involved. And with something like a financial services company, you may be monitoring seriously 500 to 1,000 different risks that are actually monitored on a monthly, daily basis. And this comes to the great thing of what? By exception. So if something comes in that trigger category, management and the board, you're going to spend more time on it. And that's always goes. So George, that's my summary of what the risk appetite is and generally how it's used in the boardroom.
Okay, great. Yeah, and from what you were saying, there's a lot of sub areas associated with that we'll be getting to a little bit later. But Brian and Larry, you want to jump in on that particular question and help us understand a little bit about how your organization and what you do within that group?
Yeah, sure. So, really liked what was said about the overall risk appetite, and an emphasis there is on how it aligns to the business priorities, strategies, and objectives. And I think when you think about it in the context of cyber risk, it's really it's a challenge for CISOs to represent cyber risk in such a way that it stands alongside of financial risk and operational risk. And those are business risks that are, I think, easier for boards to understand. It's closer probably to their background. And so one of the challenges that I've had or that I've seen in the past is security organizations will come in with some information around their patching cadence, the number of vulnerabilities, cyber vulnerabilities across the attack surface. But what they have a hard time doing is drawing that into conclusions that the business then can make informed decisions around. So one of the things that I really, I think is really powerful is everybody uses the same risk formula, likelihood times impact. But what I do when I speak to the board is I talk about the likelihood that the impact is going to be realized in dollars in the next 12 months. And now we're talking in terms that we can start to assess the risk appetite of the cyber risk impacts to that broader business risk portfolio. It really starts to position it as a business discussion.
Right. Yeah, and that's ultimately the really key thing, right? Because we can go and talk technology all day long and get into the nitty-gritty associated with it, but it really comes back to what does all that mean from a business perspective and business value, and what are we going to focus on? So that's really important.
Yeah, for sure. And one quick comment I'll let Larry jump in is that we have a responsibility to draw those risk impact conclusions for the business. And in a lot of scenarios, the information is presented and letting the business come up with their own risk assessment. I think we really have an obligation to the board to draw those conclusions for them.
Absolutely. So Larry, your thoughts?
The only thing I would add is that risk appetite varies not only by company, but by sometimes divisions of company, and that we shouldn't expect a one-size-fits-all. Mm-hmm. If you are a defense contractor building missile systems, that risk appetite may be a little different from a financial services, from an agricultural enterprise. But it is absolutely important to speak at the board and at the management levels about what that risk appetite is and have tangible examples of what it looks like. What if this happened? Does this fit inside of our risk appetite? And really think through what that looks like, as opposed to waiting for a risk to happen and then hotly debating whether or not this risk is worth taking without any framework, without any reference to an appetite. It's got to be a muscle that gets exercised prior to the emergence of those risks.
Yeah, that's a great point. And one of the things to add to that is it's not really a simple formula, because you have qualitative and you have quantitative. And obviously, it's very difficult to measure the qualitative aspect of it. And if you're lucky enough to have something quantitative, then getting all the factors that you need to be able to put a metric on it is difficult. So the measure associated with that is part of the art associated with it, right?
Well, and I'm curious, from a board member perspective, even if it's qualitative, I make it quantitative. I turn it into dollars, and I document the assumptions and the conclusions that drive that. And my experience has been that as long as I've got good logic behind it, and it's directionally correct, it doesn't have to be 100% accurate. They can make an informed decision of the rest. But I'm curious from a board member perspective, do you guys see it that way as well?
I think it's helpful to quantify. I don't think everything can be quantified, but you're absolutely right. And the only add-on point I would make is that the framework is not in concrete. The framework is a guide. Yeah. Human beings still need to assess, analyze, put it through the ringer, understand what the framework we're using, but you still have to sit around that table and make a decision at the end of the day. So don't think that you got an appetite, you've exercised it, you got a framework, it's going to just spit out the answer. That's not quite the way it works.
No, it would be nice if it were that simple. So, Herman, do you have any comment on that last part to add? So I just saw something, a note from Leah. Thank you for that. So this is, our goal is to make this as interactive as possible. So I know a lot of the questions that I've had in the past, being a CIO or a CISO or in a C-suite role, or even being a board member and working with other board members, is getting that different perspective from other board members on how they interact with their C-suite, that communication methodology that they use, the accountability and the measurements, because you can put together a risk portfolio and a profile and your appetite, but then how do you measure it against how you're performing in the organization? And especially, Larry, what you were talking about, not everything can be measured, right? A lot of it is qualitative, but you need some kind of report card to be able to say, how are we doing against that? So I noticed that we do have a question. So Leah, I'm going to point out the questions, but if you would read them, that would be awesome. Can you do that for me?
Sure. I don't see any in the Q&A, but I know there's a hand up from Rod, if Rod wants to go first, and then I'll take the other question from the chat.
Yeah, there was one in the chat.
Sure. So I had a question because when Brian was talking about quantifying and talking about dollars, I think that's kind of something I've heard a lot about FAIR being the kind of the model a lot of folks use. And at Verizon, when my boss actually came up with a new asset value-based risk quantification that is not based on FAIR. His take, and I agree with it, is that you really can't quantify cyber risk in dollars because it doesn't really work in cyber. So I'm just curious, as board members, when you see your CISOs or folks trying to quantify that cyber risk and giving you dollars, how do you really trust that? Because I mean, again, at best, it's a swag based on history. If you had a breach 3 years ago and it cost you this dollars in fines or this whatever, that changed. If that was 3 years ago, it's done. It's very different. So I'm just curious, how do you guys want to see that risk conveyed to you and quantified for you?
As I'm presenting to the board, I hear exactly what you say. Matter of fact, I even hear from board members that you can't quantify it. So what is the challenge there? I think what's really important is to think about what is the impact of quantifying in dollars the risk, or what's the objective of it. The reason that you do that is that so that we can make an informed, proportional decision around risk mitigation. It's not we're not trying a legal case. We're not looking for beyond a reasonable doubt. If we've got if we've got assumptions that talk about the impact in dollars that give us a directional understanding of what the financial impact is, it changes the whole conversation. We stop debating about where it fits within that framework, as Larry was saying, and we talk about the change. You would be shocked at how good people are at estimating. And we look at it, when I look at impact, I'm looking at it either in, was the dollar impact if confidential, highly confidential data is exfiltrated or the integrity is lost, or there's a disruption in core business processes. It really falls into those three categories.
Yeah.
And so if I'm off by 5%, if I'm off by 10%, I'm not an insurance company. My business model is not based on that accuracy. I want to make sure that the board makes a proportional decision on how they prioritize actions and investments. And so I really do think that people shy away from trying to represent that in dollars and having, and I love what Larry said, not a framework, smart people taking a look at what the potential impact is going to be if that breach is realized. It just changes the conversation. And I usually get pushback from the board once, and then we stop talking about that and we start talking about the business impact.
Yeah.
And I'm shocked by it. Yeah.
Yeah. So I'm curious, Herman, from this perspective, quantitative versus qualitative, and not just with the cyber side, but with any risk associated with it. So how do you and your fellow board members want to look at things regarding when you're evaluating risk, right? There's an impact on the business and things of that nature. It's not always just financial, right? It can be people's perspective of your organization and what that results in. You can always ultimately say that'll reduce our revenue by 8% if they think that we're, not as strong as others in a cyber environment or whatever, but
right.
Not specifically in the cyber realm, but overall, what are your thoughts on that?
Yeah. Well, look, all things in business cannot be put down to numbers. And sometimes our goal and our role as a board member, there are two things we need to do very well. And actually three. We pick a CEO because that's important for the culture of the organization and the vision and all that great stuff. And then what we need to do is ask questions. And by that, I mean seeing around corners. Our job is to anticipate things based on, in a good board, right? You're going to have a diversity of perspective, experience, et cetera, and be able to do this. And not all thing is quantitative. So it's not like you get a perfect answer, you underline it and say A and S. So if you think about one of the big things that's very important to any organization is reputational risk, right? And that's not going to be a number per se. That's going to be a loss in faith, a loss in confidence, a loss in the fact that you can't deliver. So then you look under that and say, what are the underlying causes of things that could very well cause a reputational risk? So if you look at other things you can look at in terms of personnel and culture, right? We can look at number of resignations. We can look at what happened in terms of compliance and those types of things to get an idea. But still, the decisions that we are going to confirm that the management make is going to be made of a gut feel. Look, board members, we're no smarter than management. However, we do take a different perspective. Okay. And that perspective is the long-term perspective for value creation and taking care of the stakeholders, which we think of as not only our customers, not only the investors, but also the employees you've got to think about in making things go. So a risk right now, one of the big risks out there is employees, right? People having to make decisions. Do I make my employees come back to work? Yeah. Right? All the senior people, they want them to come back to work. The board may want them to come back to work. But there is a flight for quality, particularly, Brian, in the CISO type area, right? You got to be very careful with that right now because there are not a lot of excess people out there. So how do you balance the risk of saying, I want my people together because culturally it's a risk if we don't keep our culture together. And culture is certainly a combination of a lot of things, but it's not a number that we can add up.
Right. And that's a perfect segue into our next question, which is one of the questions I have down here, which is basically, as a board, we have a role in communicating the company's risk management strategy to all stakeholders, right? But not only to communicate it, but also to listen and to understand what's important to the entire organization from a stakeholder and culture perspective. And then that can help us create that overall risk management structure and framework that really aligns and creates a risk-aware culture throughout the organization. So with that, Larry, you want to chat a little bit about that perspective and the stakeholders and how you interact and how you make sure that that's a part of your overall risk strategy?
Sure. Stakeholder management, as it relates to, risk is an important element of the responsibilities of the board, but there are limits to it. The board doesn't send out emails to all staff, about things that management does. And in fact, no board that I'm on has ever sent out a message to all staff on something during my tenure. So that's an important set of stakeholders that we would not directly communicate with. Clearly, the board has a significant responsibility with the investor stakeholders, particularly at the compensation committee, risk, the chairman of the board, lead independent director. There are lots of conversations that happen with the street, with the investors, with the analysts. There's the analyst day. Board members show up for analyst day. Part of the conversation, risk management, along with growth and earnings, et cetera. So I would say that constant communication or effective communication with a broad set of stakeholders, and this is debatable, but I think is handled more by management than it is by the board, but the board does have to set that tone. The board does have to make it clear that there is a risk appetite, that there are effective processes in place. The board does have to get people comfortable that we understand our risks, our talent risks, our people risks, our cyber risks, and that they're being managed, but the board does not communicate them as exhaustively as management does.
Right. No, agreed. And the stakeholder, that's a very, broad encompassing term, because it really involves anyone that is associated with your organization. So, Herman, do you have any thoughts on that? And that was a great point, Larry, about it's not really sometimes the board's responsibility for that communication to certain stakeholders, but they're certainly involved in setting all of that and setting the tone and holding those others within the C-suite accountable to accomplish those things. So Herman, you have any thoughts on that?
I mean, I would just agree with Larry, and then, the old adage of nose in, hands out, right? So there's a difference between governance and management, and we are there for governance. So, in terms of telling employees what to do, I don't think that would ever happen. However, serving as a role model, serving as a beacon of what the organization stands for in terms of honesty, integrity, and those types of things, that needs to come out through interactions. Because, we're going to deal with senior managers. You're going to have a dinner with them the night before the board, during the annual meeting or wherever. You're going to interact with, investors and, as Larry said, analysts sometime. Or more and more wanting to talk to the board to understand both about strategy as well as risk and what's that going on. However, it's very important that the board members understand the line between management and governance. And we will look at the why. Why are we doing it? Management's job is to determine the how.
Yeah. So what's the board's role in that perspective to hold the C-suite and others accountable to ensure that risk-aware culture is actually happening as far as a report card coming back? Is there any responsibility on board for that?
100%. And primarily in our capitalist society, that comes through the compensation system, right? You can certainly jawbone and you make people know the things that they're doing right and wrong. But in the end, it's all about the scorecard, i.e. the compensation. And then that's where it becomes very tricky somewhat. You can say, hey, it's all about ROI and it's also TSR, total shareholder return. Okay, you do that and people will try to meet those goals, but maybe some of those other cultural aspects are important to you, like doing it ethically, doing it in the right way, making it sustainable, et cetera, may not come through. So that's a lot of my boards. We're having a lot of discussion on how important the financial targets are versus those other targets. And, what's become not a nasty word, but something debatable now is ESG. Is that important? How do we put that in a scorecard? And should we be talking about it? And, one thing that I know I'm concerned about, boards I'm on with the recent Supreme Court decision on the colleges at Harvard and UNC, is diversity important anymore? And it'll be interesting to see how that translates. And I've had 2-3 board members since that opinion came out, and all of the boards that I'm on, we're still saying, hey, we're going, because diversity is one of those things. It's a risk, right? And obviously there's blowback both ways on that. However, I look at it as a market issue. If you look at the statistics of people under the age of 20, majority of them in America are people of color. So if you're going to have a sustainable organization, and let's translate that out to 2040, 2045, who's going to make your products? Who's going to sell your products? And who's going to buy your products? And if you don't have a diverse perspective, that's a risk.
Yeah, I can tell you, I moderated a panel not that long ago with the chancellor of Lone Star College and one of our senators. And I can tell you that diversity side of it, and ESG as well, is becoming more and more prevalent in the discussions at the board level. So, but Brian, did you have any comments on this last question?
Yeah, well, so I liked what the key point around the board really being responsible for governance and senior leadership, and the organization being responsible for management. And I think that if you get the alignment around what the risk appetite is, not just with your active risks, but what you want to manage to, there's a lot of governance levers that can be pulled. We do, if you're a risk-driven organization and you're not just compliance-driven, policies and standards across the organization are put in place to manage risk in compliance to that. Having a risk management process that aligns to the risk governance objectives of the board is critical. So if I get alignment with the board on how we quantify, or what is defined as a critical, high, moderate, and low risk, and I get agreement with the board, alignment with that risk appetite of if we can mitigate within a certain time frame each of those thresholds, that aligns to the risk appetite, then the board can govern risk without having to be involved in the management of the risk mitigation. And then as a conduit, or somebody who's accountable to the board and the audit committee, I can show how well we're complying to policies, standards, where we're managing risk within SLA, without having to have them touch every single risk or be actively involved in the communication and the management. But yet the direction and the accountability can still reside with the board. If you've got that structure set up, it can be really powerful.
Yeah, I can tell you, I've been on.
I would also just add one quick thing, and that is the board can send very clear signals with its actions. Does it pay any attention to the internal audit reports? Does it insist that the trends look positive? Does it pay attention to the policy-making infrastructure of the organization and insist that they be updated? Does it pay attention to the risk register and look at the enterprise risks and insist on mitigation plans for each of those risks and have those plans presented to the board? Does the board create this environment where people know that the management of these risks is absolutely important and there's no doubt about it? The board absolutely has the power to set that tone so that people really pay attention to the management of risks in an effective and structured manner.
Yeah, which this is kind of leading in, segueing into, and I know we have a couple of different polls, so we wanted to take one. And Charles, if we can go ahead and do that now. We have one of these polls associated within your organization. And again, the more we get interaction from the audience, we'd really like to be able to help make it more personal for you guys and align with some of the questions or some of the issues that you or your boards are facing. So this is one of the ones that we'd like to go ahead and run through. What's the greatest challenge to organizations' board of directors? You have 4 different risks, and this varies based on maturity of the organization, where they are in life cycle, what industry, what vertical they're in. So there's a lot of different aspects to determining which ones. So if everyone wants to go through this survey real quick, that would be awesome. And as you're doing that, I'll go ahead and I didn't see, Leah, do we have any other questions right now?
We do, yeah. So one, I know Dee Dee has her hand up, so we can, if we want to take Dee Dee's question, and then we have a couple others in the chat.
Sure, let's go ahead and do that while we're doing the survey.
Thanks, Leah. So based on your statements and sharing information about the boards concerning about the governance, the risk management, and so forth. So my experience comes from the oil and gas, where a lot of the CISOs report to the CIO, heavily involved in preparing for the board report. But the feedback usually is very little in terms of, oh, you only have 5 minutes to present on the cyber risk. How much actually is it discussed? Is it an overall concern at the board? I understand that every industry is going to be different. From the oil and gas perspective, it seems like not very much. And I just wanted to get that perspective from the board members here. Thank you.
When I'm talking, that often happens to me. I've got probably 15 or 20 minutes, and I have the largest agenda on the audit committee, the subcommittee of the board, and I always get squeezed down to 5. And so what I need to do is distill it down into the board. I actually think works for me. I have to transition accountability of the risk to them, and I've got to hold them accountable for either making a decision or supporting a decision into the organization. And so if I've got 5 minutes, that's what I lead with. And that's why I do like making these fact-based conclusions around the impact, as opposed to just presenting data. If I present data and hope that they'll draw the conclusion, there's too much left to chance that they're not going to be making an informed decision. So in that situation, if I've got 5 minutes, I'm going with 2 risks, or the risks that are most impactful, and I'm going to be very succinct in what I need from them in support. And then if they're not comfortable making that decision, then they can give me more time and we can go into the details.
Yeah, if I could just back Brian up there, and sometimes when people get that opportunity to brief the board, they just want to tell them everything. Okay, less is more. So this is where your communication skills, both in terms of chart preparation, and I like what Brian said. Every time I get just a bunch of numbers, this is the first thing I ask. So what? So ask yourself that question. So what? And when you're presenting to the board, it's not like you've got to get every detail. Remember, we're if we need to drill down, we'll drill down. So the assumptions, your hypotheses, and more important, your conclusions of so what. And if you got 5 minutes, you know how to do it in 5 minutes, right?
Yeah. And so one of the things I would encourage everyone to do is look at cyber not only from a risk perspective and what we need to do to mitigate the threat and the bad actors, but a strong cybersecurity hygiene in an environment can be a competitive advantage too. So it's a two-way street. It's not just what do we have to do to protect ourselves, but what can we do to leverage cybersecurity in our environment to create a competitive advantage for our organization. So Larry,
Sorry, this is Parrish. Can I jump in and ask a question to follow up to that? Sorry.
Sure.
Yeah. So Brian, I was just kind of curious though, have you found in your experience that from a cybersecurity standpoint that some of the compliance and regulatory pieces have been more advantage to you to bring those sorts of items up and getting support from the board because you can pinpoint that there's sort of regulatory fines or something to do with that? Has that been more successful?
Early on in the development of some of the security teams that I've ran, that has been. It's the first thing that starts to get traction. It won't take long for a cybersecurity organization to grow past the motivation of compliance and regulatory. When you think about it, with the possible exception where the lack of compliance limits the company's ability to sell into a market. So something like FedRAMP is, I would put in a different category. But when we talk about things like some of the state and local regulatory requirements that are largely governed by fines, that's a motivator. But there's a bigger motivator that the boards react to as long as we come with a point of view. If we come with a strong point of view and talk about the financial impact that that risk presents, the boards are pretty quick to ask clarifying questions around how you came to those conclusions. And then boards love making decisions. Boards are very comfortable being accountable for those decisions. Their challenge is that they don't have the context because they don't live in the business day to day. So I don't mind using the compliance and regulatory as a starting point. It's a good way to get some traction, but you should really grow past it pretty quickly because you need a level of accountability and support that it's not hard to get past, both from a security posture perspective and an impact past regulatory and compliance requirements.
Larry, you want to go ahead and jump in?
I think the only thing I would add here is I'm fortunate that the boards that I've dealt with, I haven't yet seen the phenomenon of cyber always gets squeezed to 5 minutes, but I'm sure it happens and for good reasons. But one of the things I am seeing on boards is the whole notion of how do you spend time dealing with this risk just as you deal with other risks. So while I'm not seeing a lot of technology or cyber committees of the board setting up, although there's some, there have been a number of technology and cyber subcommittees of the board, in many cases subcommittees of the audit committee, which provides quality time for the CISO, quality time for other leaders. And it's important that it's not the CISO only, but sometimes some of the other leaders who have to deal with some of this risk. And in addition to that, people who lead these technology and cyber committees are now meeting with the CISO on a regular cadence. And you end up with the readout to the audit committee, the actual meeting of the technology. I mean, 2 of my 3 public companies have technology and cyber committees. Some of the private ones do. So I think we're seeing this notion that we've got to spend quality time on this. Just doing it at the board isn't necessarily the right answer. Lots of compensation stuff doesn't happen at the board. It happens at the compensation committee. So people shouldn't feel slighted if their time at the board was truncated, as long as there are models of interaction that make sense for that organization.
Yeah. Herman, did you have any comments on that last part?
No, I think I've and the only thing I'll add, just particularly because all technical issues, I would suggest if you're briefing the board, be aware that all the board members are not profoundly aware of all the acronyms and these types of things. So practice your presentation and have someone pretend that they don't know anything about your subject. And one of the things that you can think of it like this: a typical board member has an area of expertise. Mine is real estate business. Larry's a technologist. But the issues that cover your core competency only really come up about 10% of the time. So the other 80 to 90% of the time, you've got, generally speaking, present company accepted, smart people who are looking at something, have to evaluate it and make a decision. So just use that, because many times I see when the technical people come in, they're so excited that they just start talking their technical jargon. And you say, CISOs out there would just think about that as a preparation technique.
Right. Yeah, and that's always been a very important aspect for anyone speaking to the board, is the communication, and it has to be effectively communicated in terms that the board understands. If you go in with acronyms and tech speak, then they're going to glaze over and they're not going to hear another word you say, and you may get 2 or 3 minutes versus anything else. So how we communicate on the C-suite to the board is extremely important, and you have to speak in their terms and their language. So I've always said CIOs and CISOs have to be multilingual, because you're speaking board speak, tech speak, and you're speaking to all the business leaders in their tongue as well, to be able to understand what is important to them. So
we have a question from Solomon.
Yeah,
okay.
George, if we want to take Solomon's question, his hand is raised, and then after his question, Raymond has a good question we can address, and then we can continue on.
Okay. So Solomon's question is?
Yeah, so very simple. It's more around the governance question. If when dealing with a situation where you may be in executive management and on the board, how do you address, or what guidance would you give with respect to governance versus management discussions in that context?
Yeah. And just to comment on that, so it's a tremendous differential between governance and management, but a lot of boards get a little confused on that. And I've seen many boards that lean a lot more heavily to the management and get their perspective into the actual operations. And then there's also the boards that govern correctly and that are governance models as opposed to management. So Herman or Larry, or do y'all have any comments on that?
Yeah, I mean, if you've got to learn how to be directional. When you're in the boardroom, you don't put your management hat, you don't speak as a manager. You certainly use your management experience to inform what you're going to say. However, you have to understand, again, you're in the governance role if you're an insider on the board.
Yeah. And I think everyone's natural tendency is to fix things, or at least if you're from my background, if you hear a problem, you want to solve it, right? Well, as a board, we're not supposed to solve the problems. We're supposed to understand and govern over the process associated with that. Larry, did you have any comments on that?
Nothing really additive. I completely agree with Herman. This tendency to reach in, solve problems. Well, from my experience, we should do it this way. Yeah. is not a best practice for the board, because everybody's got different experiences and everybody comes up with a different answer, which just leaves management bewildered as to what did the board just say. Right. So completely agree with Herman on this.
Okay. So the next question that we had, Leah, was...
Yeah, so here's a good one from Raymond. How much are boards drilling down on the insider risk, especially in the wake of the recent loss of confidentiality with the highly sensitive military data? The example is, with the 2 sailors that were involved in possibly providing sensitive information to another nation.
So the board that I report to and the board members that I speak to in the Valley, it's probably the biggest discussion in the context of data security or data risk that is happening. Ransomware is still a huge topic, and used to be the biggest topic in the board meetings that I attended 2 years ago. Now it's insider threat, and the reason is just that it's so difficult to try to protect or manage, and it is real. So it's paramount in the board that I work with.
Yeah, and I'll just reiterate, a lot of the focus in cyber is external. What's the external threat coming in? But a lot of times we tend to minimize or overlook the insider aspect to it, which is far more difficult to defend against than the external side. At least that's a known type of environment, where insider is much more difficult. So Herman, Larry, you have any comments?
Well, one quick thing there, and it doesn't have to be malicious. In all of my years doing cyber risk and business continuity associated with technology, the biggest issues I've dealt with in the last 20 years have not been outside or have not been attacks on the organization. It's been insider threat, and all but one time it was not malicious.
Yeah.
This is where our priority or focus should be.
Right.
Look, agree that insider threat is hugely important. On the fence as to whether or not the board should drill down because it's important. I would go back to the opening question. There must be a framework, and insider threat must be part of the framework, and management must demonstrate progress on mitigating the threat, explaining the threat, understanding the impact it has had on the organization, as opposed to the board waking up and saying, you know what, I think I'm just going to go drill down on insider threat today, or I think I'll just go drill down on this other one tomorrow. there's got to be some structured framework. There's got to be some method to the madness. There's got to be some approach that one would use to make sure everything, the appropriate things are being handled and mitigated, as opposed to, hey, get ready, the board's drilling down on insider threat next month.
Well, I think it just comes down to what we said earlier. The board's job is to ask a question. And to the extent that they get indications that insider security is an issue, you just say, hey, what are we doing about insider security? It's that simple. That's a question. And it's management's role to respond to that.
Agreed. So real quick, we have just a few minutes left. Charles, you want to throw that last survey up there so we can have the audience go through that. And then, and as they're doing that, the last question I'd like to, if each of the panelists would just speak just a few minutes to it. So we've been talking about all the risks that come in, right? That we face, that our company faces, and how we deal with that, how we take the risk appetite and create this risk portfolio and profile and framework to be able to make sure we're doing our responsibilities from a risk perspective as a board. But what about tomorrow's risks coming down the pike? Because we all know that emerging risks are coming faster and faster and faster. And as a board, what can we do to be able to look at those and potential disruptors of our business? And I'll give you an example, like generative AI, right? There's a lot of, that's the hot topic now. So how do we do that as a board of these new things coming in, as well as balance those with all the existing ones?
Well, one of the, being in an insurance company board, one of the things that is certainly emergent is the environment. Okay, we've all probably lived somewhere where you've had some extraordinary weather for the last month or so, and involved in that will be phenomenal losses. So the issue comes down to pricing decisions. How do you do it? It comes down to mitigation in terms of how do you make structures less prone to destruction, et cetera, et cetera. And in terms of the Chat GPT, every board I'm on, we're coming up with policies in terms of how to use it and not abuse it, because I think we've all heard about the attorney who basically used it to do his appeal, and the cases were made up, and I think he's disbarred now. So that's an extreme example of just depending on it as a guide to keep you some way, but you still got to do the gumshoe work.
Yeah. Larry, any thoughts?
Look, I think board education is important, and board education does help the board anticipate new trends. And board education comes in a number of different forms. I believe that part of the board agenda is education, bringing outsiders in or bringing specialists in management to talk about certain topics with this express purpose of educating the board on those trends. Personal responsibility of board members for education, certifications, awareness, conferences, best practices. I believe that board members absolutely have a responsibility to ensure that best practices of governance, and in some cases, specifics around the particular industry, that there's some level of education that is required to ensure that we are fit for a purpose. So between board education at the board and personal board education, I think those two things help. And then there's a third. Boards very often engage in strategic offsites. And part of that strategic offsite is not just a review of the strategy, but a discussion of what might be. What could the future look like? What are those trends? And I think that is a really important element of solving for that equation as well.
Yeah. Larry, that's a perfect way, I think, a perfect way to end. I know I need to turn it back over to Leah, and I wanted to thank all of the panelists for this interaction and all the people in the audience. And that was a great ending, Larry. Thank you very much. Lee, I'll turn it back over to you.
Thanks, George, and everyone else as well. And I know there were a couple of questions we didn't get through and some really good conversation in the chat. So I'm assuming it's okay if others want to reach out to you all to continue the conversation or for more questions. That's okay?
Absolutely.
Absolutely.
Sure.
Amazing. Okay, well, this has been really, really a good discussion. I know we can always go on for hours, right? After our sessions here. And I do want to thank again our sponsor, Cohesity. I also want to thank all of our speakers for being here tonight, as well as everyone else who's attended, and for all of your insights and questions and contributions to the conversation. So thank you. With that being said, just a quick reminder that the next event is going to be on August 24th, the Elevate Xchange Mastermind event, which is about a half day. So looking forward to seeing you all in a couple of weeks. And then lastly, if any of you would like to be on the Elevate podcast, please do reach out to me. But again, thank you, everyone. This session was recorded, so we'll share that recording out on the website. And have a good evening, everyone.
All right. Thank you.
Thank you.
Take care.